Welcome to Morning Brief, presented by Robinhood, the home to commission-free trading. I'm Yahoo Finance Executive Editor Brian Sozzi. Let's fire up three things you need to know today. The precious metals trade is losing some of its shine. Silver price is down nearly 3% after hitting a fresh record above $80 an ounce. At one point on Sunday, silver's market cap was slightly more than Nvidia's market cap of $4.63 trillion. Although I want to note this comparison is pretty much meaningless in terms of market analysis. It's just a finance fun fact for your trip to work this morning. You're welcome. Now Elon Musk is warning about the move higher in silver, saying it's not good because of the metal's use in industrial production. Plus, Bitcoin is fighting for gains. The cryptocurrency trading above $90,000 on Sunday, though it has pulled back a bit from that level today. Either way you slice it, Bitcoin has finally broken out of its brutal 11-week downtrend. That's good to see for the crypto bulls. And investors are hoping for a Santa Claus rally to close out the last few trading days of the year. December has been kind to the bulls. The Dow Jones Industrial Average is up 2% on the month. The S&P 500 is up 2%, and the NASDAQ has gained 1%. Year to date, all three indices are up by double-digit percentages. Not bad for the money-making bulls. Let's get a quick check in the markets. Oh, speaking of those bulls, we're getting some bearish vibes here today. All three major indices ahead of the open are in the red on this holiday-shortened trading week. All right, let's get after it on our top investing stories right now. Chris Versace is Tematica Research's Chief Investment Officer, and we have Yahoo Finance senior reporters Inez Ferre and Broq De Palma. Chris, let me start with you here. Thin trading this week, but the market has been pretty much on an upward bias for the better part of the month. What do you think investors are wagering on?
You know, Brian, I think folks are taking a look at what happens in 2026. You know, the year end, as you mentioned, very quiet, very calm. Folks are doing their homework for the coming year. We've got CES next week that could bring a lot of confirmation for not only new devices, but potentially a new wave of AI adoption. But for me, I'm kind of sitting back waiting for the December quarter earnings season. You know, when I look at that S&P 500 PE multiple, it is pretty lofty, and it tells me the coming year is going to be more predicated on upside for earnings growth. That's what I'll be focused on.
Chris, I'm glad you called out that CES. I suggest everyone watching this or listening, January 5th, put that on your calendar. That's Jensen Huang, Nvidia CEO. He will give a speech. AMD CEO Lisa Su will give a speech that day. Very important market drivers. Broq, I know you're tracking. You got some good comments out of Ed Yardeni this morning.
Yeah, we sure did over the weekend. Ed Yardeni saying that he expects productivity growth to really drive momentum into 2026, ongoing to what we've seen so far in 2025. And he has a pretty bullish outlook, as with consensus on the street, largely bullish calls on what 2026 S&P 500 targets as high as 7,100. In particular, Ed Yardeni really does see this broadening out of the S&P 500. He does expect it to push above about 10% to 7,700 by year end of 2026, largely led by earnings momentum. He expects earnings growth of about 10% in 2026 as well. And also he expects this broadening out of the AI trade as opposed to just concentration within the Mag 7 that we've largely seen this year. He specifically said within this note that he expects these stocks to broaden out to what he called the S&P 500's impressive 493. So really not just those AI producers, but rather these AI users who are implementing this technology to really once again boost that productivity, which he expects to really lead to growth next year as well, in addition to what we've already seen within 2025. And so he's just one of the many bulls on the street that expects this ongoing optimism as we make our way into the new year.
And as I wonder if the bulls are forgetting the fact that copper and silver are used in industrial applications, and with prices at records, prices to build things are going to go up. It's going to hit profit margins, or maybe they're not making any of these connections yet.
Yeah, well, Elon Musk certainly made that connection over the weekend when he basically tweeted out that silver going so high and China putting restrictions on exports of silver was not good because it is very much needed for industrial uses. And I was taking a look at the U.S. Geological Survey that showed that data center server boards use a lot of silver. You've got silver in EVs and solar panels.
Inez, that's some damn good research, Inez. Not to interrupt you. I mean, that's some good research. That's the stuff we need here on a Monday
Well, I was
morning.
very much curious about where exactly so much silver is being used in weaponry as well. So look, this precious metal, as Bespoke Investments put it, this trade this past year, or since 2022, really, if you take a look at the metals market, Bespoke Investments was saying the metals traders telling the AI boom traders, hold my beer, because you have seen precious metals absolutely soar this year. With silver, it's up 155%. We are seeing today that it's down because it had a crash. I mean, over the weekend, look, on Friday, you saw silver going up by more than $10 an ounce. That is something that is rarely seen. You saw backwardation. That means that the spot price was higher than the futures price. You're seeing concerns over China that's putting restrictions on silver exports starting January 1st. And it is on the critical metals list for the US. So certainly when you're talking about silver, it is one of these metals that is important. And the parabolic move that you've seen is concerning.
Chris, the demand for these industrial metals, it's there, it's high. That's in part why you're seeing the rip higher in the prices of them. How could we have this continued talk of an AI bubble when it's clear we need metals like this and you're seeing demand like that?
Yeah, no, I agree with you, Brian. I think, it's easy for people to say, oh, look at the big run up, look at the big capital spending that we're seeing, but you really got to pull the camera back a little bit and look at other areas of the market, just like the conversation you were having. But at the same time, let's take a look at the steady growth in AI adoption in the enterprise, in consumers. OpenAI had a simply wonderful and revealing report out in the last few weeks about enterprise adoption. We heard the same thing from Accenture. We take a look at how consumers are embracing AI during the holiday shopping season, starting to use it to book travel. To me, that focus on usage is really key. And I think a lot of folks are kind of missing that. And when you go back and compare it to smartphone adoption or even broadband adoption, yes, the levels that we hit peaked out, but new applications drove continued usage. That's the key.
Chris, I don't want to knock the Yahoo Finance community, but I will make this general assumption that a lot of investors, a lot of retail investors were caught by surprise by this move in commodities into year end, which part ties into AI. Like, what should they, do you chase a rally when it has been moving parabolic like Inez mentioned?
No, I mean, we at the Street Pro portfolio, we're not going to do that. We try to be very disciplined buyers, not momentum players. But having said that, Brian, and you know this, we like to blend a combination of fundamentals, thematics, and technicals to be that disciplined investor. It's just not our bag, like I said, to chase momentum like that.
You heard, Chris, real quick, you heard Brooke talking about this rally broadening it out. Where else could we see surprises in part driven by AI? What's that next sector? What's the next 5 stocks?
Well, I would say this. I think, barring outside, the chip players and the others that are going to benefit from the infrastructure, whether it's the energy pain point like Eaton or the network demand like it's Marvell or Arista Networks, I think you want to look for companies that are helping drive productivity. One of the ones that I think is kind of a sleeper hit on that is Axon. A lot of folks think, oh, tasers, body cameras, but you think about the police shortage that is out there, the need to do more with less. I think AI is a great driver of productivity inside that end market, which is expected to continue to grow over the next several years as is.
Brooke, let me get back to you because I think you brought up a great point on this rally broadening out. That might be one of the biggest themes, at least in the first half of next year, that investors realize there is value in 493 other stocks, not just the Mag 7.
And I think, Brian, we've already been seeing that as we make our way towards the end of the year, more movement towards utilities, towards industrials, really investors trying to seek out different ways to get in on this AI trade. Even Nvidia, the star of the show this year, now seeing a bit of a pullback in one of the last 3 days of 2025's trading sessions. And so really this broadening out is where investors' mindset seems to be in 2026, moving forward into that. And also, where exactly can they get in when they they don't say that Nvidia's valuation is too high to still get in, but at the same time, where can they get in at other places as we see other use cases for AI and really adoption broaden out. Also worth pointing out as well that Google, as we make our way towards the end of the year, has seen a tremendous run year to date, now really firing up towards that November, December, especially around their Gemini model, even surpassing that of Nvidia year to date so far. And so clearly investors are looking for other places to get in on this AI momentum besides just the star of the show, which was Nvidia earlier this year.
And as I've seen moves like what we're seeing in silver, gold, and copper, I've seen this movie play out so many times in individual stocks. I mean, we are in a euphoric period for commodities. You almost have to think this will end badly at some point in the near term, even though demand, like we've just been talking about for these metals, remains strong.
Yeah, and over the weekend, I wrote an email to Mike McClellan over at Bloomberg, who has been warning about these parabolic moves and saying, yeah, sure, you could see gold going to 5,000 next year. That's momentum, but you could also see it going down to 3,500. So he's been warning about the 1979 scenario where you saw something similar, where you saw massive gains, you saw a peak in 1980, and then you saw the metals crashing. And that's basically what he's been warning about here. And I wrote him as saying, look, there's this debate going on about the deficit with these metals when it comes to silver, when it comes to copper, that you need this for all the AI data centers. And he says, yes, there's always a story. There's always reasons why. But his whole thesis is watch out, take profits, because he believes that we have seen this movie before in 1979, 1980, very similar pattern.
Chris, what's the best way? If you are a believer that this move in commodities is going to continue, we're going to see maybe another 10, 20% move in various stocks, is the best way to play it a miner like a Freeport-McMoRan, or do you just keep it simple with an ETF?
I would keep it simple with an ETF, Brian, but I also want to just back up a second and say, we have seen significant moves like this before. Earlier this year, for example, in nuclear. And, at the time, even though you're sitting on these big moves, I think the individual investor sometimes forgets that it is okay to sell some of what you have, not necessarily all of it. Take some of those chips off the table, take those profits, redeploy them elsewhere, leave some chips on the table to capture further upside. But to answer your question directly, Brian, without a doubt, an ETF, I'd like that diversified exposure.
All right, thank you, Brooke and Inez. Chris is going to hang with me for a little bit longer. We'll be right back with some of his top picks in the tech space for next year. Welcome back to Morning Brief, presented by Robinhood. Let's hit some Yahoo Finance trading tickers. We're watching Digital Bridge, Intel, and Lululemon. First up, Digital Bridge. Shares of the investment firm are ripping in pre-market trading that after the tech investment beast, SoftBank said it would acquire the company. The price tag, $4 billion. Digital Bridge focuses on data centers and other digital infrastructure. Before Monday's move, Digital Bridge shares were up more than 20% this year. The firm has a $2.5 billion market cap and roughly $108 billion in assets under management, or as the pros say, AUM. Next, Intel. The stock little changed after the company completed its stock sale to Nvidia. Nvidia purchased more than 200 million Intel shares as antitrust agencies cleared the transaction earlier this month. Back in September, Nvidia announced it will be taking a $5 billion stake in Intel. The U.S. government is also now a shareholder in Intel as well. Nvidia shares are under a bit of a pressure ahead of the opening bell. And finally, Lululemon. The company's founder, Chip Wilson, has reportedly launched a proxy fight to change his struggling retailer's board. According to the Wall Street Journal, Wilson is seeking to nominate 3 new directors, including former top execs from On Running, ESPN, and Activision Blizzard. The challenged athleisure brand needs to stage a comeback as the stock has plunged more than 40% this year. Results have been awful. And Wilson isn't the only activist in this stock. Elliott Investment Management has a $1 billion position and wants to put a former Ralph Lauren executive in the top spot. All right, Nvidia bulls are still trying to make sense of its $20 billion surprise deal for AI chip player Groq. Nvidia didn't even put out an SEC filing on this one. I mean, go figure. It also hasn't said anything publicly about this deal. The only one who has had something to say is the likely much wealthier Groq founder, Jonathan Ross. Ross pointed out on his LinkedIn over the weekend, clearly he's jazzed about this. He will be joining Nvidia as chief software architect. Big role for Jonathan there, for sure. While this deal gets digested by Nvidia, investors are also wondering how any slip-ups by the company in 2026 will be received, and what is the outlook more broadly for large-cap tech stocks after another strong year in 2025. Chris Versace is Tematica Research's Chief Investment Officer. Chris, got to get your thoughts on Nvidia. I find it funny. You and I are, I think, fundamental analysis at heart, and I'm surprised there was no filing on this deal. You spent $20 billion, and you don't even get a filing.
Biggest acquisition they've ever done, Brian, no filing, and they sneak it through on Christmas Eve. I agree with you. It's a bit of a head scratcher, especially when you take a look at the multiple that they're seem to be paying. But we've seen other big multiples of late. ServiceNow picking up Armis, $7.75 billion on $340 billion in revenue. And, I think this is a larger trend that we've seen really over the last year, Brian, where these large cap companies are flexing their balance sheets, filling in technical gaps or holes, kind of as a competitive move so they can compete on a greater scale in 2026.
Chris, I remember being in the Streets offices when I worked there, and you may have been there too as well. Maybe 2017, and the Streets founder, Jim Cramer, always would come in very bullish on Nvidia. He was one of the first people that I know championing a bull case on Nvidia. And his case was Nvidia essentially dominates the chip market. At the time they were doing gaming, but now they're also, of course, the main leader in AI. Do you think this acquisition signals that they are concerned that Groq was working on something that they didn't have in their pipeline?
So I think it's more of an effort of them to shore up their inference strength, Brian. Again, taking a very strong competitive position, extending it further as we move deeper into AI, moving past simple training into figuring out what is next, making their models that much sharper. And I think we're going to see more of this. You know as well as I that there's never one company making a sole move. There's always what we like to call the competitive response. So what is AMD going to do? What is, Broadcom going to do? What is Marvell going to do, and others? And I think, if you step back too on this, it's another signal that we're likely to see the M&A strength we saw in, the current quarter continue into the new year. And if you're a shareholder of, Morgan Stanley, JP Morgan, Goldman Sachs, you're going to feel pretty good about that.
Chris, I just had a story hit our website on, I like the headline. I wrote it, it's fine. Amazon stock might rise 50% next year. And it would be a big number, but I think lost in the sauce here, this stock is only up 6% this year, despite some decent financial results. But the main concerns being slowing growth for AWS, and if it is a real AI stock play. Do you view Amazon as a real AI stock play? Because I think changing the thesis on how they will contribute to AI is important to get this stock working.
So it's kind of an interesting, company, right? So on the one hand, people are like, oh, it's a retail company. Look what they do in digital shopping. On the other hand, they're a cloud company, given what they had with AWS. And even more recently, Brian, people have been saying, oh, Amazon, sleeper company in digital advertising. Look what they're doing to the trade desk. And I think when you step back, you really have to ask yourself, where does Amazon really make their money? That is, of course, AWS. It's the biggest driver of their cash flow as well. And as it becomes larger, it really helps kind of balance out the seasonality that we've seen in the past from the retail-facing business. But to your question on AI, I think they're going to use it to help drive productivity inside of AWS, help improve cash flow prospects, improve their margins. The real question to me is how can they really leverage it on the digital shopping side? And some of the early data that we've seen about Rufus, where folks are actually buying more when they use Rufus, that's a pretty positive play, data set for us to think about. But as far as Amazon being an AI company, we're going to need to see more of them selling their wares outside. So we're going to have to watch what they do on the chip front, I think, for that to really take hold.
Chris, just listening to your explanation of Amazon, I mean, you're spot on. I can't help but to think, does the business model, has it gotten so complex? Do we need to bring back into discussion if this company should break up? Look at some of the things we just talked about. They have an e-commerce business, AWS Cloud. You have a chips business in Trainium. They're making robots. They have advertising revenue and probably 10 other businesses I'm not even mentioning here.
Yeah, I don't think so, Brian. I'm sure you'll get some folks out there, particularly some congressional people in the state of Massachusetts that might say, oh, this is too big. We've got to do something here. But personally, I don't see it. I think if we were to see one business, really dominate the overall revenue mix, then I think that would be the case. But I think when you step back too and you look at the larger industries that they compete in, there's still much room to grow and a lot of room for other competitors. So I just don't see that.
Chris, in the 45 seconds we have left, make your case for your favorite tech stock for next year.
My favorite tech stock for next year? Oh, I would go with Marvell, Brian. And the reason being is, a lot of folks are focusing on the chip business at Marvell and what they're doing with the third-party AI wins, whether it's with, Microsoft, Meta, or even Alphabet and Amazon as well. But I would step back and say that if we continue to see AI adoption and usage grow, like we talked about in the earlier segment, we're going to see network congestion. As that happens, we're going to see incremental capacity come on stream. That helps explain the big spending on AI and data centers, but it's the network connection that will be the big bottleneck that I think folks are missing. Good for Marvell and the other stock that I mentioned earlier, Arista Networks.
Great insight as always, Chris. Happy New Year to you. I will be talking to you very soon. Appreciate it, man.
Same to you, my friend.
Thank you. All right, that does it for Morning Brief presented by Robinhood. I'll be back in just a moment, opening bid. I will be. I'm running to the other side of the studio right now.